will be live streamed. Also present is a stenographer, Ms. Alonzo, who is reporting this hearing verbatim. To ensure we have an accurate record, we ask that everyone speaks one at a time and does not speak over each other. Also, speak clearly and loudly. When needed, Ms. Alonzo will stop the hearing process and ask for clarification. After the hearing, Ms. Alonzo will produce the official hearing transcript, which will be available at the Office of Tax Appeals website. The Office of Tax Appeals is an independent and neutral agency. It is not a tax court. All three judges are co-equal decision makers, and we can all ask questions at any time. I'd like to offer a few reminders to help the process run as smoothly as possible. First, please ensure your microphone is not muted when you speak. Otherwise, your voice will not be picked up on the live stream, even though we can hear you in the room. You need to speak into the mic for it to pick up on our live stream. And, as a reminder, these proceedings are being broadcast live, and anything said today and any information shared today is publicly viewable on the live stream. With that said, are there any questions before we go on the record?
No.
Thank you. We are opening the record in the appeal of Gilbert. The OTA case number is 230112472. This matter is being held before the Office of Tax Appeals. Today's date is May 14th, 2025, and the time is approximately 9:30 a.m. This hearing is being convened in Cerritos, California. Today's hearing is being heard by a panel of 3 administrative law judges. My name is Keith Long, and I will be the lead administrative law judge. Judge Stephen Kim, and Judge Asaf Kletter are the other members of this tax appeals panel. All 3 judges will meet after the hearing and produce a written decision as equal participants. Although the lead judge will conduct the hearing, any judge on this panel may ask questions or otherwise participate to ensure that we have all the information needed to decide this appeal. As a reminder, the Office of Tax Appeals is not a tax court. It is an independent appeals body. The panel does not engage in ex parte communications with either party. OTA will issue an opinion based on the party's arguments, the admitted evidence, and the relevant law. For the record, will the parties please state their name and who they represent, starting with the representatives for FTB.
My name is Topher Tuttle, representing Franchise Tax Board.
This is Brad Catino, also representing Franchise Tax Board.
Gary Slavitt, representing appellant, Gary Gilbert, Charlotte Gilbert.
Mr. Slavitt, can you make sure that your microphone is on and maybe move it a little closer to you?
Sure. Gary Slavitt, representing appellants.
Richard Gano, representing appellants.
Thank you. The issue to be decided in this appeal is whether appellants have established reasonable cause for the late payment of tax. My understanding is that appellants have 4 witnesses today.
That's correct, Your Honor.
Can you please introduce them?
Sure. To my right is taxpayer Gary Gilbert. Behind me, to your far left, is Brian Divney. Next to him is Jeffrey Goldstein. Goodstein. I think we got that wrong twice. And next to him is Dan Hirsch.
Thank you. Could the witnesses all please stand and raise your right hand? We're going to go one at a time on the response, okay? And we'll start with Mr. Gilbert, and then you can all just, I do, from right to left there afterwards, all right? Do you swear to tell or affirm, or do you swear or affirm to tell the truth, the whole truth, and nothing but the truth?
I do.
I do.
I do. I do.
Thank you. You may sit. The exhibits for this appeal consist of FTB Exhibits A through J and Appellant Exhibits 1 through 4. At the pre-hearing conference, Appellant had no objections to FTB's exhibits, and they are admitted into the record. Similarly, FTV had no objection to appellant Exhibits 1 and 2, and they are admitted into the record. After the pre-hearing conference, appellants submitted Exhibits 3 and 4, identifying each as Exhibit 3, email correspondence dated April 15, 2021, between the CPA, Dan Hirsch, and Gary Gilbert's financial manager, Brian Divney, and Exhibit 4, email correspondence dated May 17, 2021, between Brian Divney and Dan Hirsch. Can FTB please confirm whether there are any objections to those exhibits?
No objections.
Thank you. Exhibits 3 and 4 are also admitted into the record. Today's hearing is anticipated to take approximately 2.5 hours. We'll begin with the appellant's opening presentation and witness testimony. Mr. Slavitt, you have requested 2 hours, and you may begin when you are ready.
Thank you. We are here today because, despite their best efforts, Gary and Charlotte Gilbert incurred a $413,000 late payment penalty for their 2020 individual income tax return Form 540. The evidence in the record and the testimony today will clearly establish that the late payment was due to reasonable cause and not due to willful neglect. To establish reasonable cause, the Gilberts must demonstrate that the failure to timely pay occurred despite the exercise of ordinary business care and prudence. That is, would an ordinary and intelligent and prudent person have acted similarly under the circumstances? Here, the Gilberts did everything they could to pay their California tax timely, but despite their best efforts, their payment was late. Why did this happen? The Gilberts relied on tax professionals with competency in California income taxes to determine their estimated income tax by the due date. And the tax professionals' advice was based on the taxpayer's full disclosure of relevant facts and documents. To understand the complexity of this calculation to determine the estimate of the Gilbert's income tax for 2020, we need to understand a little bit about Gary Gilbert activities. First, I'd like to point out that the Gilbert's 2020 tax return is over 500 pages. It's a very in-depth tax return, multiple states, and requires quite a bit of work. Gary Gilbert has multiple ventures. He is a film producer and businessman. He is co-founder with his brother of Rocket Mortgage. Rocket Mortgage is the largest mortgage broker in the U.S. with over $15 billion in revenue in 2020. The Gilberts know that their taxes are extremely complicated and take extra care to ensure they are compliant with their tax obligations. To ensure compliance, the Gilberts hire CPAs and other professionals to assist them with their tax compliance. The Gilberts take all measures possible to timely pay and timely file, and have done so every year without issue. As part of the Gilberts' team of professionals is Brian Divney. Brian Divney manages the Gilberts' investments and provides family office-type assistance with the Gilberts' finances. Mr. Divney works with the Gilberts to gather all necessary tax information and assists with them providing that information to the CPA firm. The Gilberts retain the accounting firm of Frank, Hirsch, Zableski, and Friedman to prepare their individual tax returns. The Gilberts used the accounting firm for over 10 years without any problems. So what happened? Gary Gilbert's primary income for the 2020 tax year is from Rocket Holdings, Inc., which is a holding company for Rocket Mortgage, the largest mortgage broker. Gary is a 0.598 shareholder of Rocket Holdings. Despite his relatively small interest, his flow-through earnings in 2020 was quite large. On or about April 6, 2020, Rocket Holdings issued a 5-page document for the purposes of providing Mr. Gilbert with sufficient information to determine his estimated taxes. The Schedule K-1 was to arrive many months later. The April 6 document is Exhibit 1. So here, as we will further explain through testimony of CPA Dan Hirsch, and his team calculated the estimated tax due for 2020 incorrectly. While the information the CPA team had from Rocket dated April 6, 2021, was not as robust as the final K1 issued in September 2021, the April 6, 2021 information had sufficient information to allow an accurate estimate. Despite this, CPA Hirsch and the CPA team made an error in the calculation of the California tax estimate. Page 4 of Exhibit 1 contains information for extension purposes for Mr. Gilbert's 2021 estimated federal income. This is the information provided by Rocket dated April 6. Page 5 of that exhibit provided information regarding state taxable income. There seems to be some confusion with this document. The FDB has indicated that the document states that the Gilbert's California tax liability from their Rock Holdings income was $3.6 million. The FTB then ponders why the Gilberts would think that their California income tax liability was less than $3.6 million in April of 2021. The FTB has it completely wrong. The document clearly provides that the $3.6 million is the estimated taxable income, not the tax liability. Again, that number is what Rocket is telling Gary is the portion of Rocket's income attributable to Gary that is taxable in California. That is not the tax liability. In fact, the testimony will show that today that this taxable income number is the number that the CPAs used as taxable income in California to determine the estimated California income tax for 2020. Exhibit 3 will show how the CPAs determined the estimated tax for 2020 to be $1.4 million rather than $7 million. Exhibit 3 contains an email of April 15, 2021 from the CPA regarding the amount the CPA recommends that Mr. Gilbert pay with their extension by May 17, 2021. For clarification, the Gilberts had already made estimated payments of approximately $1.1 million prior to April 15, 2021. Therefore, the CPA determined the total estimated tax for 2020 to be approximately $1.45 million. The CPAs therefore made a recommendation for the Gilberts to add an additional $350,000 with their extension. Exhibit 4 is an email dated May 17th, which is the due date of the payment, to the CPA, which instructs the CPA to make the estimated payment to California of $400,000. This number was rounded up from the original recommendation of $350,000 to allow for a cushion, and this amount, in fact, was paid. As of May 17, 2021, the Gilberts did everything possible to pay what they believed to be the correct estimated taxes for 2020. They followed their CPA's advice and even added a little bit just in case, as they had done so in the past, for the past 10 years or so, without any problems. They had no reason to believe this estimate would later be determined to be wrong. The actual K-1 for Rocket was issued in September 2021. That's also in the exhibit. It's quite a large document. You can see it's probably 40 or 50 pages. Now that the CPAs actually had that K-1, they were able to do the correct calculation, and they determined the liability was about $7 million. So what did the Gilberts do? They paid the remaining $5+ million immediately. Fortunately, available funds was never an issue for the Gilberts. When advised by their CPA to pay the final estimate of $350,000 in April of 2021, what did they do? They paid $400,000. When told by the CPA in October 21 that their actual tax liability was much larger, what did they do? They paid the remainder amount, over $5 million, immediately. Ask yourselves, what else could they have done? Here, the Gilberts relied on competent CPAs regarding substantive tax advice as to the amount of the estimated income tax that would be due in California for 2020. And that advice was based on full disclosure of the relevant facts and documents. There is nothing more the Gilberts could have done. Based on all the facts, the Gilberts' late payment of tax was due to reasonable cause, as they exercised ordinary business care and prudence. Thank you. So I'd like to call my first witness, Dan Hirsch. Let's see how we're going to do this.
Maybe I can move forward.
Yeah, maybe move over. And I'm also going to have Jeff up here as well. Dan and Jeff together. You can just bring that chair. Yeah. All right, Dan, what is your educational background?
I am a graduate of Michigan State. I earned my CPA certificate approximately 1980. I've been in practice for over 40 years. In its present, I am a shareholder, or at the time was a shareholder, in the firm Frank Hurst Sabelski and Fried.
And how many CPAs approximately are in that firm?
Today there are 13 CPAs.
Okay, and as part of your profession as a CPA preparing tax returns, do you prepare California tax returns?
Yes, I do.
And how often do you do California returns?
I have a variety of clients, both business and personal, in the state of California that we service.
And tell me about how you met Gary Gilbert.
I met Gary Gilbert through his brother Dan Gilbert, and Gary became a client of the firm approximately 2008.
So more like 15 or 16 years rather than 10, as I thought. Yeah.
Up to this, yes.
And did you do his brother's returns as well? Or do you work for his brother?
We did work for his brother, but he left the firm. His vast wealth dictated a larger organization because there were so many arms associated with it. So it was in his best interest to, and they made that decision.
Great. And in working with Gary Gilbert and Charlotte Gilbert and doing their tax returns, how do you receive information to prepare their returns? Generally,
the communication for the most part was through Brian Divney. Brian had his finger on the pulse of everything that Gary had, not only from a personal but from business perspective, and we both were the recipients of tax information to prepare tax returns that we had access to through Rock Holdings.
So with respect to this tax year, 2020, and other years, Gary Gilbert he is a shareholder in Rock Holdings and receives K1 and K1 information. Is that correct?
That is correct.
How do you generally obtain that information, the K1 and the relevant information that comes maybe before the K1?
We were on a preferred receipt list from Rock Holdings, so through Dropbox, we would receive an email and we would retrieve the information from that Dropbox, and then we would save it within our system. Brian Divney, I believe, had access to that information as well, under the same methodology.
Okay, great. So let's move to the tax year at issue, which is 2020, and you were doing the work obviously for the 2020 tax year in 2021, right?
Correct.
And in April of 2021, I would like to show you Exhibit 3, page 2, which is the email from Mr. Hurst to Brian Divney. Do you recognize Exhibit 3, page 2?
Yes, I do.
And could you tell me a little bit about what this email is?
This email represents our findings for not only the extension payment that was due May 17th. This was COVID. State of California extended the due date of the extension payments until May 15th, I believe. But the first quarter 2021 quarterly estimate was still due April 15th. So we were on top of that, or, we were aware of the filing requirements, and over the course of 90 days prior to, as year-end information becomes available, if you can imagine the pieces involved, it's not just a K-1, there's 1099s from investment income, things that come through, information that's available, beginning most likely by January 31 from the brokerage houses. So it wasn't a one and done here. It was an evolution, as each year we would have done for Mr. Gilbert, of accumulating the information and not do it all at one time. We would bring the information in, enter the information, and manage that information. But when push comes to shove, and really always comes down to waiting for that tax information from Rock Holdings, and that's when things get set in place to ultimately come to a conclusion on our part, or a position on our part. This is where we think we're at.
Great. And as part of this email, there was some attachments with some draft returns. Is that correct?
That is correct.
And if you can take a look at Exhibit 3, page, I did, Your Honor, yesterday upload or provide Bates stamped exhibit. Do you have that exhibit? The Bates stamp version?
Yes, I'm looking at it.
Okay, thank you. Bates stamp page number 142 of Exhibit 3. And Mr. Hirsch, this was attached to the email as part of the draft return. If we look to the page 142 of the exhibit, it talks about what the amount due was. Could you maybe elaborate how you arrived at this and how you did this calculation? And I'm sorry, this is the amount
That we requested
Yes.
for him to pay.
And on page 140, Bates stamped, line 66, it has the total tax. And what does that say there?
$1,468,465.
So this was, and we'll get more into the testimony here, but this was, correct me if this is correct, you had information from Rocket dated April 6, 2021. That information was used in your system to prepare an estimate, which you did through a draft kind of return?
That is correct.
Okay. And this is line 65 shows what you believed at the time to be the correct estimated
The
total tax.
The total tax of $1,468,465.
And on line 72, this shows how much was already paid.
That is correct. $1,137,883.
And on page, it's multiple times, but on page 142, Bates stamped, line 4, line 111 is what you estimated was owed, plus I believe 113 was
Yes.
was
Additional income.
amount.
Yes.
So line 4 was the amount you had recommended.
We rounded up from $349,406 to $350,000 at the time.
Okay, so now let's get into a little bit what you used to calculate that number, how we got to that number. Exhibit 1, Exhibit 1 is. Exhibit 1 is, I think, a 5-page document. I'm going to put that in front of you here. This is the information that you would have downloaded or received from Rock Holding?
That would be correct. Yes.
Okay. And it's not a K1, is it?
No, not at all.
And what would you say the difference between a K1 and information like this?
It's a snapshot of what they perceive to be as the income. And may I look at this?
Yes.
This page, 2020 estimated federal income tax for extension purposes is the line items that we use.
Page 4 he's referring to.
And, in this instance, there was $51 million of taxable income along with other sources of income that we would have projected and entered into our software. And then on the next page,
Page 5.
And this is where we faltered. We backed down the income, or subtracted out from the income reported on the previous page to back down to the California sourced income of $3,674,786.
Okay, and when we look at Exhibit 2, this is the K1. Exhibit 2 is the K1 from Rock Holdings, is that correct?
That is correct.
And it looks to be 100 pages or so, is that correct?
That is correct.
And once you received this package with the actual, California K1 in the package with all the other state K1s, what would you have done?
We would have entered the information exactly as it was presented on the K1.
And the K1 provides boxes and more detailed information how to enter this into your tax software, is that correct?
Precisely.
And so once you received this information, you determined that the correct tax was $7 million approximately. Is that
Correct.
correct? Okay. And on May 17th, let's go back to Exhibit 3, page 2, Exhibit 3, page 2, the email. After you had done this calculation with the April information, again, this was the email you sent making your recommendations, is that correct?
Yes, it would have gone to Brian Dibney.
Okay. And then on May 17th, Exhibit 4, there's an email from Brian authorizing you to please make those payments you recommended plus $50,000. Tell me why he's telling you to make the payment. Were you making payments for Mr. Gilbert at this time? Or?
No, I would go on the IRS website and the state website and make those payments on behalf of the taxpayer. Brian had provided me the routing and the account number in order for me to make those payments. Mr. Gilbert relied on us to provide that service.
Okay. And Jeff, do you have anything to add to the testimony of Dan?
No, I mean, that's all accurate.
Okay.
Everything, yeah.
Okay, that's all the questions I have for Mr. Hirsch and Goodstein.
Thank you. Before we move on, we'll ask Franchise Tax Board, do you have any questions for the witnesses?
No questions.
Okay, thank you. I'm going to ask my co-panelists if they have any questions. Judge Kletter, do you have any?
This is Judge Kletter. I just have a couple questions to clarify. So you mentioned that the original income figure was from this April 6, 2021 communication showed 51 million of ordinary income, but you subtracted or backed down that number to 3,674,000. Why did you do that?
We surmise that would have been the taxable income in the state of California for California tax purposes.
And in the past, have you received this kind of communication from Rock Holdings?
We would have received similar communication in past from Rock, yes.
But usually when you receive that communication, would you go with the page 4 number or, whatever that income figure was, or would you go with the estimated tax figure?
I honestly don't recall in past how that would have been calculated. But suffice it to say, in past, the numbers were never anywhere near the magnitude of this K1. So there was I don't want to say safe harbors, but, you know, we were conservative in our approach as to what he would have paid in. And the numbers were so large this year that we missed it.
Okay, and just to be clear, when you say we, this estimated projection from Rock Holdings Exhibit 1, is there any mathematical error in the information in Exhibit 1?
No.
Okay, thank you. No further questions.
Judge Kim, do you have any questions for the witnesses?
Yeah, this is Judge Kim. I just had one question. So the California adjustment of $48 million, that was just arithmetic, trying to get to that 3-something million figure? Or what was the basis for believing that that would be the correct California adjustment?
The basis would have been to back down the non-California sourced income reported on this exhibit to try to, for that specific K1. There may have been other K1s that made up his return. If you do the math on that exhibit that was on the tax return as part of the draft, it's not exactly that number. There perhaps were other variables, other K1s that we had, or that were California, either California based or, you know, that we would have already had the finished product, you know, that we would have entered. So I can't make a correlation to the exact number that showed up as the subtraction on that California return. And unfortunately, when we did the draft return, we saved it, but it, you know, or it was an ongoing work in process tax return. So I never froze out that version of the tax return at that moment. We just continued on as between April 6th, as we, you know, we came to our conclusion, and the October 15th due date of the return as more information became available. We just updated that version. We didn't freeze it, save it as that version, and I've learned a lesson that, you know, that is probably more prudent in a circumstance like this, but it's not the rule, and I don't believe any I can't say any. We didn't freeze it out. I never expected in my wildest dreams that I would be scrutinized for the results of a return like this.
And since you've been working with appellants, have they always been California residents?
This is my first. Please restate the
Or
question.
since you've been filing the appellants' tax returns,
Yes.
have they always been California residents?
No, not at all. I'm a Michigan.
Appellants. Gary
Yeah.
Gilbert, Mr. Gilbert.
Mr. and Mrs. Gilbert.
Yes, he was always a California resident.
Okay, thank you.
Thank you. I also have just a few questions. Mr. Hirsch, you touched briefly on your experience with California returns. Are you a licensed California CPA?
I am not.
Okay. And how long have you been preparing California returns for? Approximately.
Before I met Mr. Gilbert, I've had California clients before.
Okay, so we're talking, I believe you said Mr. Gilbert.
15 years
15
plus
years?
minimum. Yeah.
Okay. And then do you have any other experience with California tax law outside of preparing returns?
No.
Okay. And then with respect to, my understanding is that the advice that was asked was essentially, what is the tax liability in California? Is that correct?
Please restate.
So, regarding the advice that was asked, can you please verbalize what advice was asked with respect to substantive California tax law?
To prepare an accurate extension payment, a calculation.
Okay, thank you. I do not have any further questions. Thank you very much. And Mr. Slavitt, if you'd like to move on to your next
Can I
witnesses.
ask a couple? Can I redirect?
Yes, of course.
Mr. Hirsch, in preparing the California income tax estimate, did your firm make a mistake in this calculation?
Yes, we did.
And are you generally aware that a California resident such as Mr. Gilbert would be taxed on the entire amount with credit, less credits and other adjustments?
That is correct.
Despite that knowledge that you had for many, many years, you still made the calculation mistake. Is that correct?
Correct.
I have no further questions.
Thank you. If you'd like to move on to
Okay.
your next witness, that'd be great.
We're going to have Mr. Divney. Mr. Divney, I'm just bringing it up here to kind of tie everything, to connect the dots, for lack of a better term. Mr. Divney, tell me about your educational background.
Sure. My background, I have over 30 years experience in the investment management industry. I have an MBA from New York University in finance and international business, and a BA from Rutgers University in economics.
And how do you know Gary and Charlotte Gilbert?
I've known Gary for over 20 years and Charlotte for almost as long, and met them through his brother, Dan Gilbert.
And what do you do in the business sense for the Gilberts?
Sure. I provide advice to the Gilbert on their investment portfolios and on financial matters related to their family office and to the film production business.
And as part of your services to the Gilberts, do you work with them on having their tax returns prepared?
Yes, I do. Gary and I work together to collect, organize, and forward all relevant tax information to his CPA. We've developed policies and procedures over the years to ensure that we have complete information as available, and do that on a quarterly and annual basis.
Great. So let's move to the 2020 tax year, which is the year at issue, which the returns are being worked on in 2021, obviously. And I'm going to have you look at Exhibit 3, page 2, which is an email from Mr. Hirsch to you. Can you maybe please give me a little bit of background of what your memory of this email is and how it came about?
Sure. Sorry, the date of this is April. Right. So even though the deadline that year had been extended to May 17th for returns and for payments, we had been working on the first quarter and on 2020, and it was very common procedure for Dan to provide his final estimate on the amount that should be paid.
And is this something you could have calculated?
Oh, no. I'm not a CPA. Accounting isn't in my background. The Gilberts have dozens of different investments, private, public, K-1s, 1099s, in addition to a complicated film business. So it's very complex, and we rely on CPAs to do tax calculations.
And if you couldn't calculate it, could Gary Gilbert calculate this, in your opinion?
I think you'd need to be a very experienced and trained CPA, and if you're not, I don't know whether it was me or Gary. I don't think anybody else could have.
Me neither. All right, so I'm going to point you to Exhibit 4, which is an email from you. No, I'm sorry, from the bottom part. There's two emails here.
Mm-hmm.
The bottom part is from you to Mr. Hirsch on May 17th. Tell me about this email.
So this is just giving written confirmation for Dan to trigger payments. As Dan stated before, for estimated payments, he would go directly to the IRS or the state websites and make the payments after given the banking information. And with in this case in particular with California, his estimate was $350,000 payment on top of what was already paid in and carried forward, and knowing that we always have incomplete information at the time, in the April-May time period before all final K-1s come in before October, we always try to put in some cushion. So Gary and I made the decision to put another $50,000 in cushion in case there was some more information later.
Right. And you mentioned Gary, and are you communicating and working with Gary on this whole process?
Absolutely. Gary, like I said before, we work together to collect all the information to make sure that we go through our checklist, that all prior entities are accounted for, any new entities that year are accounted for, and that we also talk about the actual estimates to be paid.
Okay, good. No further questions.
Thank you. Franchise Tax Board, do you have any questions?
No questions.
Thank you. Judge Kletter, do you have any questions?
This is Judge Clutter. No questions. Thank you.
Thank you. And Judge Kim, do you have any questions?
No questions.
I also do not have any questions. Mr. Slavitt, you can continue with your next witness.
All right, Mr. Gilbert, we're moving right along. All right. Finally, Mr. Gilbert, all right. So tell me about your educational background.
I attended the University of Michigan for my undergrad.
And what do you do for work, for occupation?
My main occupation is producing films, but also looking over investments, looking at potential new investments, and whatnot.
Okay. And tell me about your relationship. We heard a little bit from Mr. Divney about what he does for you. From your perspective, how did you meet Brian and Mr. Divney, and what does he do for you?
So I met Brian Divney from my brother, Dan Gilbert, and he started working with me in June of 2002. So we're going on 23 years. And he has basically been running, I guess you could say, my family office, looking over my investments, helping me compile all the information that I need for my tax returns, and just basically looking over all my investments and helping me prepare for tax returns.
Great. And your CPA, Dan Hirsch, and his firm, tell me about how you started using Mr. Hirsch's firm and then Dan Hirsch.
So again, I was also referred to Dan Hirsch's firm through my brother Dan Gilbert, and we started working together. I believe it was 2008. So it's been a long time, 17 years.
And prior to this issue in 2020 with the payment, have you had any issues that you recall with your tax returns?
Never.
So always like clockwork, Hirsch would provide estimates, he would pay, and returns would be filed, and you haven't had an issue.
That's correct. I would compile all the information with Brian. We get it all over to Dan, and for 17 years, like clockwork, there was never an issue.
And when you received the information that you were to pay another $350,000 because your estimated tax liability was 1.4, did you think anything of that there was any reason to believe that wasn't in the realm of correct?
No.
And despite the fact that the K1 for that year from Rocket was in the area of $60 million, did you receive distributions anywhere near that amount in 2020?
I did not. I believe I received maybe 35% of that.
Okay.
But it was drastically less than the amount.
And is it your understanding that you pay taxes not only federally but in multiple states?
Yes.
And isn't your understanding that also that this year your tax liability, your estimated tax liability that was provided to you in April and May was still maybe 50% more than the prior year's tax liability to California.
Correct.
And so, again, did you have any reason to believe when told to make a payment that this was an incorrect estimate?
No, again, for 17 years we've been working together and never had an issue. It was like clockwork. I mean, we every year give him all the information, and whatever he tells me to write the check for, I write the check for.
And I've looked at your tax return, and it's 500 and plus pages. Could you have made this calculation with respect to your estimated federal or state on your own?
Absolutely not.
And were you relying on Hirsch and his firm to provide that information to you?
Yes.
And so when you were informed in September, October of that year that your tax liability was quite a bit larger and that you needed to make a $5 million or so payment, did you in fact make that payment?
Immediately made the payment.
Okay. I have no further questions.
Thank you. Franchise Tax Board, do you have any questions for the witness?
No questions. Thank you.
Thank you. Judge Kletter, do you have any questions?
No questions.
Thank you. Judge Kim, do you have any questions?
No, I don't. Thank you.
I also do not have any questions. Thank you very much. Mr. Slavitt, you may continue with your presentation.
Could I have just 1 minute to confer with my co-counsel?
Yes.
Something. If possible, could I recall Mr. Hirsch just for a question?
Yes, that's all right.
Okay.
I'm done.
Yeah, all right, so wherever you want. So, Mr. Hirsch, thanks for coming back up. I'd like to talk just briefly about kind of the calculation and how it's determined. And it's my understanding that whether income is taxable to Mr. Gilbert is obviously based on substantive tax law as to whether he's a resident, also substantive tax law as to credits that he paid in other jurisdictions, because ultimately his tax return claimed credits in other jurisdictions as well as reductions. So I would like you to talk a little bit more about kind of the tax law that comes into determining this calculation.
The tax law, my understanding is California's is all source income gets reported and it receives credits for taxes paid in other jurisdictions.
So in determining this estimate and this taxable income, you have to understand substantive tax law and make a determination based on substantive tax law. Is that correct?
Correct.
Okay, no further questions.
Thank you.
I'd like to just do a brief closing, if that's permissible.
It is, however, you have requested time after Franchise Tax Board's presentation to
sorry.
do your closing.
Yes, I forgot about that.
But if you wanted to wrap up your opening, that would be okay.
That's okay. I can finish after the Franchise Tax Boards.
Okay, thank you. We're going to take a 10-minute break, and we will resume at 10:35.
Thank you.
Yeah, I think it's almost like 70 away from 100. Okay, that's pretty good. Yeah. Yeah, now you, okay, we're pretty competitive. Let's see what we can do to bump those up. I like the way you think about it. It's like my family, but I have many friends, so that work on that portion. Yeah, this is true.
He went to the bathroom.
It looks like we're still waiting on Mr. Cano. Is that correct?
I think he went to the restroom,
Okay.
I believe.
There he is.
Are we all ready to go back on the record?
Yes.
Yes.
Thank you. We're reopening the record in the case, in the appeal of Gilbert. Franchise Tax Board, we are ready for your presentation. You requested 15 minutes, and you may begin when ready.
Thank you. Good morning. My name is Topher Tuttle, and I'm representing Respondent, the Franchise Tax Board. With me is Brad Cotino, also representing Respondent. At issue is whether appellants have demonstrated reasonable cause to abate the late payment penalty. The facts of this case are straightforward. The approximately $7 million tax amount due, showing on appellant's timely filed tax return for tax year 2020, was not paid in full until October 15th, 2021. Since appellants had underpaid the tax amount by about $5.5 million, a late payment penalty at the maximum rate of 25% was imposed because the payment was more than 6 months late. Appellants paid the late payment penalty and then filed a claim for refund, in which they argued there was reasonable cause for abatement of the penalty. This appeal followed respondents' denial of that claim. Appellants argue on appeal that they reasonably relied on advice from their tax preparers in making their payment by the payment deadline. A taxpayer has the burden of proof to show that reasonable cause exists to support abatement of the late payment penalty. To establish reasonable cause, appellants must demonstrate that the failure to timely pay occurred despite the exercise of ordinary business care and prudence. A taxpayer's reliance on improper advice as to a matter of tax law may be considered reasonable cause, provided the advice is predicated on two conditions. First, the taxpayer relied on a tax professional with competency in the subject tax law. And second, the tax professional's advice was based on the taxpayer's full disclosure of the relevant facts and documents. In this case, appellants claim that their tax preparers represented to them that a $400,000 payment would cover the balance of their California tax liability due at the payment deadline. In support of this position, appellants have provided a copy of an April 15th, 2021 email from their CPA, Mr. Hirsch, which shows estimated payments due for federal, California, and Michigan purposes. Appellants have also provided a response from their business manager, Mr. Divney, which approved a $400,000 payment for California purposes on May 17th, 2021. I'm going to discuss two problems with appellants' argument that they reasonably relied on their tax professionals when making their $400,000 tax payment at the payment deadline. The first problem with appellants' reasonable cause reliance is that the reason the estimates sent by Mr. Hirsch were incorrect is due to an apparent calculation error or oversight. To the extent that the estimates provided to appellants were erroneous from a calculation mistake, rather than a mistake in the analysis of whether a particular item of income was taxable in California, the estimates should not be considered substantive advice. It is appellant's burden to show that the mistake was related to substantive advice, which was given before the payment deadline. In this case, appellants have failed to meet this burden. The second problem with appellant's argument is that appellants have not established that they provided a full disclosure of the relevant facts and documents before the payment deadline. It is clear from the face of the April 15th, 2021 email from Mr. Hirsch to Mr. Divney that appellant's income for tax year 2020 remained in flux at the time the estimates were given. In the email, Mr. Hirsch also admits that the package of 2020 tax returns attached to the email is a draft, quote, which has so many unknowns, quote, end quote. Appellants have also claimed during this appeal that the financial picture they received from Rock Holdings was incomplete at the payment deadline. Based on these facts, appellants knew that the estimates in the April 15, 2021 email did not include all relevant facts and documents. Since the estimates were not based on a full disclosure of all relevant facts and documents as required under Boyle, the estimates cannot be relied upon for reasonable cause penalty abatement. Under Morin, a taxpayer must establish the efforts they undertook to obtain missing information controlled by a third party. In this case, there is no evidence that appellants and their tax professionals attempted to obtain further information from Rock Holdings before the payment deadline, even though they were aware that the information they had was incomplete. Since appellants have failed to establish the elements of reasonable cause reliance on substantive advice provided by their tax preparers, they have not established that the late payment penalty should be abated for reasonable cause. Therefore, FTB's denial of appellant's claim for refund should be sustained. I'm happy to answer any of the questions the panel may have. Thank you.
Thank you. Judge Clutter, do you have any questions?
No questions.
Judge Kim, do you have any questions?
No questions. Thank you.
Can you direct me to the exhibit with the so many unknowns language?
Yeah, so that's the, I'm sorry, I'm missing the exhibit numbers. It's the April, it's in Exhibit 3, page 2. That's right.
It's the email right dated.
Oh, do you have it?
Thursday, April 15th, 2021.
Thursday, sorry, yeah, the email is dated Thursday, April 15th, 2021. It was from Dan Hirsch, sent to Brian Divney in Exhibit 3.
Thank you.
It's, and the so many unknowns comes under bullet 2 in the list.
Thank you. I see it now. Okay, don't have any additional questions at this time. Does that conclude your presentation?
It does.
Thank you. Mr. Slavitt, you requested an additional 15 minutes for your closing. However, you have a lot of time left from your opening.
I won't
so
need 15.
Okay. You may begin when ready.
Before I get to kind of closing, the FTP's resuscitation of what they believe the facts are ignored much of the testimony today. They are sticking with the same story that's in their briefs, despite the testimony that was given that the CPA had all necessary information to create an accurate estimate of the income tax. That April 6th information did provide what was needed to get to an accurate amount. However, when applying that based on tax law with respect to what is taxable in California, the CPA simply made an error in their analysis of how they applied the California tax law. The California tax law is that a California resident is subject to everything, all taxes. Then they get to reduce credits paid for other states. And so to determine this calculation, you have to apply that law. Okay, this is not a case like Boyle where a taxpayer missed the filing deadline and they claimed they relied on their tax professional regarding that deadline. Mr. Gilbert didn't miss a deadline. Okay, he didn't rely on his CPAs to determine whether there was a deadline or whether he had to make a payment. Okay, he relied on them to determine the substantive tax law, which is a complicated tax calculation that he could not do to determine what needed to be paid. And when he was given that information as to what was needed to be paid, he paid. So that the issue is, what's at issue is the amount he paid was not the right amount. Why? Because he relied on his tax professionals to prepare a computation that you have to understand substantive tax law to prepare that computation. And so these are different than the Moran case, the Boyle case. We're talking about not a failure to meet a deadline by any means. He met the deadline. He just paid a lower amount based on incorrect information from his tax professionals. So, I'm going to talk kind of briefly to sum up where we are. Here, the Gilberts relied on their competent CPA regarding substantive tax advice as to the amount of the estimated income tax that would be due to California for 2020. And that advice was based on full disclosure of the relevant facts and documents. There is nothing more the Gilberts could have done. Based on all the facts, the Gilberts' late payment of tax was due to reasonable cause, as they exercised ordinary business care and prudence. I also want to briefly talk about the purpose of penalties. Why are we here? Remember, this is not about tax. He paid what he owed. He paid what he owed when he was told what to pay by his CPAs. He paid it immediately. So penalties exist to encourage voluntary compliance by supporting the standards of behavior required by the tax code. Specifically, penalties act as a deterrent of specific behavior, discouraging taxpayers from neglecting tax obligations, such as filing returns on time, paying tax due, and reporting income accurately. Here, what behavior of the Gilberts is the government trying to deter? That is, how should have the Gilberts acted differently? What should they have done that they didn't do? They hired competent CPAs and provided the CPAs with all relevant and available information. There was no way the Gilberts could have calculated the estimated tax themselves. This penalty does not act as a deterrence to the Gilberts. Perhaps if they didn't hire a CPA or they didn't file their return timely or pay timely once the CPA told them how much to pay, or they didn't give the CPA all of the information, then perhaps is this penalty appropriate to act as a deterrent so that he doesn't do it again. Here, the Gilberts did everything they were supposed to do. And so, therefore, the penalty should be and must be abated. That's all I got, Judge.
Thank you. I do have one final question, and you can bring Mr. Hirsch up if you would like. Is there an explanation for the so many unknowns language with respect to what is being discussed here?
Or maybe Mr. Dibney may have an idea, but I want to bring Mr. Hirsch up as well, since that email was written by Dan.
So in April, with the various investments that the Gilberts have, much of the information is an estimate. So for, say, investment accounts that are invested in public securities, that's 1099s are definitive. Many hedge funds, private investment vehicles, private companies don't have complete information at that time to provide to us. And we've experienced that years and years before, and years before would say we need more information. But by this time we understand that Rock Holdings only is going to be giving us a certain amount of information. In addition, there's some other less of magnitude but investment vehicles that only provide estimates, and a final K1 comes in sometime between an April 15th estimated payment, or in this case May 17th, and the October 15th extension filing.
Okay. And Mr. Hirsch, I'm going to point to you to the language that the franchise tax pro is referring to.
It's being taken out of context, to be frank with you. Unknowns is more reference to we don't have the information yet. It's not an uncertainty of information. It's an unknown of source documents to have been received to date.
But based on the April 2021 Rocket Holdings information, could you have prepared an estimate that was more accurate than your 1.4 million?
Yes.
So isn't it true you had information on April 6, 2021, or about that time, that would have allowed you to prepare a very accurate estimate?
Yes.
Was there any information, additional information that would have helped you? I think I know the answer. Would have helped you to get more accurate?
The answer is no. For the vast majority, there's always additional information that's presented on the actual K1 itself that may change, but nothing to the magnitude, with all due respect, of not having picked up $50 million of taxable income and shouldn't have backed out $48 million to get to a net California income of $3 million. I was wrong.
Okay, thank you. I just want to ask my co-panelists if they have any further questions before we conclude our hearing. Judge Clutter, do you have any questions?
This is Judge Clutter. No questions. Thank you.
Judge Kim, do you have any questions?
No additional questions. Thank you.
Thank you. We are ready to conclude this morning's hearing. The record in the appeal of Gilbert is submitted on Wednesday, May 14th, 2025. The record is now closed. Thank you, everyone, for coming in today. The judges will meet and decide your case later on, and we will send a written opinion of our decision within 100 days. Today's hearing in the appeal of Gilbert is now adjourned, and the afternoon calendar will begin at 1 o'clock. Thank you.
Thank you.
Thank you.